All right, thanks, guys. Yeah, the mining sector has become ever so popular once again because of the battery aspect of the market that everyone keeps talking about. We also have gold trying to bounce after a little bit of a pullback from its recent highs. Scott Moore is president and CEO of Eurosun Mining and joins us on the show today, a Canadian-based mineral company operating in Romania. Great to see you, Scott. Thanks for doing this today. We appreciate your time. Let's talk about the company to start things off. For anyone not familiar with Eurosun, let's get a little bit of knowledge, if you will, on Eurosun Mining.
Sure. We're a single mining asset company based on a big asset here in Romania, discovered in 2004. Again, we trade on the TSX U.S. market as well as the Frankfurt market. We currently hold 10 million ounces of gold, so this is and 1.5 billion pounds of copper. So this is the second largest undeveloped mining project in Europe at the moment, and about the 14th largest undeveloped in the world. So big, easy project, and certainly trading at an attractive valuation for people to enter at the moment.
Yeah, ESM, if you want to check it out, guys. ESM, the ticker on the TSX here in Toronto. Yeah, Scott is in Romania, joining us all the way from Romania today. Welcome to the show, as I mentioned. Let's talk about the feasibility study for the mine recently completed, Scott.
Sure. Just last week, this is a big de-risking event for any mining project to go through a definitive feasibility study, get actual quotes for mills and mining equipment and such. So the confidence level in both your operating costs and CapEx costs is extremely high. We put out a great study, showing $360 million of NPV and 20% IRR after tax, and, free cash flow of $700 million over the life of the mine. So producing about 146,000 ounces of gold a year for 17 years. So a really great project with really high confidence level in the numbers.
Let's talk about this. Rovina Valley is the mine, or the area of the mine in Romania. Tell us a little bit about the characteristics that the company looks for when starting to develop a site. And then I really want to get into, the development process, because I learned a lot from you when we spoke earlier in regards to how long it takes to actually develop a site and get it to production. But tell us a little bit about what the company is looking for exactly when choosing a location.
Well, Romania, incredible mineral endowment. And certainly when the company made the discovery in 2004 and over the ensuing years as it continued to drill up and during exploration, porphyries are great targets for mining companies to go for. They're big, they're simple. This one in particular is open pittable. So easy mining, easy processing, usually higher CapEx than you might find in a typical gold mine, but being within the European Union in a first world jurisdiction, infrastructure is key to move the project forward. So that makes the project easier and certainly the opportunity to move it forward quicker than you might expect.
So 40% copper, and then the rest, 60% obviously, in the gold market. What are you most excited about when it comes to these minerals coming out of the mine?
Sure, like I said, exactly that split in terms of the life of the mine project. We only make a copper concentrate, so I guess effectively we are a copper company, but with high grade gold. But you have, the growth in battery metals is certainly, everybody's seen that coming. The supply side response to, Dr. Copper, as they like to say, is tough to do. These are big mines normally and tough to ramp up even bigger. And the permitting phases globally are incredibly long, as we can talk about. But this is near-term production, 2024, delivering, nice new copper concentrate into the market. Again, particularly in the European Union, for this growing need of battery metals.
All right, so the average, the global average, when it comes to getting a mine to production from discovery, 15 years. That seems like a very long time, Scott. Tell us what is involved in that process, and I mean right from the first stages through to where we are now.
Sure, and it's all about de-risking, right? Confidence levels are where you have. So you have a discovery, you're drilling some holes, you get some success, you keep drilling, you come up with a resource, an inferred resource, and then you move down the confidence levels or up the confidence levels through measured and indicated to reserves. You start doing engineering studies, you start doing initial permitting around getting whatever exploitation licenses, as it were. And you turn around one day and it's 15 years later. It's an incredibly laborious and long process. It's all about de-risking. Remember, when you drill a drill hole in mining, it's a 2-inch hole, and then you put another one 200 meters away and try to say, the ore body is the same in between. So we have 150,000 meters of drill core on our project, and some projects are, over 1 million meters of drilling. So this is what happens. It takes a long time to get that confidence level, but de-risking events typically bring higher share valuation.
And it speaks to the confidence that investors can have in the company, that the due diligence has been done on the location before the production does begin. Speaking of confidence from an investor standpoint, let's talk about the corporate structure a little bit of the company. Very well backed.
Yeah, sure. We're probably half institutional and retail shareholders. We now have probably 3 of the largest gold funds in the world, in Ruffer, Franklin Templeton, and the Merck Gold Fund, based in the U.S. And this is typical what happens in the development scenario, that specky retail investor that loves to gamble on a drill hole kind of moves on to the next casino, as it were, and developers start picking up institutional shareholders and start getting real long-term shareholders looking at that re-rating ability as you go up that value curve towards an actual production and re-rate. So trading at a higher and higher multiple towards your NPV value as you go forward.
So we'll talk about the stock a little bit as well. We mentioned very, very liquid, tons of volume, tons of opportunities, I think, here, even from a trader standpoint. We showed the chart a little bit earlier. Guys, if you want to check it out, ESM is the ticker on the TSX. Currently, as I mentioned, listed on the TSX. The company is considering, though, an LSE listing over in London. Explain.
Yeah, it's all about getting more eyeballs on the story, right? And a London Stock Exchange listing is Yamana has recently gone over there. Wheaton Precious Metals has gone over there. It accesses new generalist shareholders, like the typical precious metal buyers will be able to buy on most markets, particularly institutional shareholders. But it's an opportunity to give that generalist funds that can only buy LSE listed companies new product, particularly with our project being in the European Union. The familiarity with Romania is much higher with, let's say, potentially with a UK listing versus just the Toronto listing.
Yeah, and I mean, a very exciting time to be in the space, regardless of where the stock is listed, obviously. But as you said, the more eyeballs, the more attention we can put towards the story. It's a great sector to be in. I feel like it's only the beginning when it comes to the battery angle, as we see more and more companies making electric vehicles and electric, put anything beyond that. So a great time to be getting into the space, and a great time always to be in the gold space. Scott Moore, President and CEO of Eurosun Mining. A pleasure.
Thank you very much.
Best of luck. Yeah, no, great story there, guys. Brand new, or not brand new, but brand new to production, their Romania site, guys.